I think that we're in a unique circumstance right now. I think that we're coming out of a 40-year cycle that featured rising bond prices and lower interest rates. And I don't think that you can take interest rates meaningfully below zero. So I believe that if we are not at the end of the bond cycle, we are much closer to the end of the bond cycle than to the beginning. And I think that ultimately bonds and gold move countercyclically. Bonds are a good time investment when they're cutting the interest rate. They're raising the value of existing cash flow streams. And if the expectation of the future is benign interest rates and benign economic conditions, nobody's afraid of anything, so nobody buys gold. In a circumstance now where the arithmetic around debt instruments is so bad, yet the prices of debt are still so strong, I think we're coming in for a sea change. Think about yourself, Shay, as the holder of a U.S. 10-year treasury. I know you wouldn't be, but put yourself in that shoe anyway. You loan the U.S. government, which is an increasingly bad credit because of debt and deficits, money for 10 years. And they promise to pay, which they do, absolutely, pay you 1.5%. So far, so good. But they pay you in a currency which they, not some cranky old libertarian, they say is depreciating in value by 6.5% a year. That means that the U.S. government absolutely positively guarantees that they're going to cost you 5% a year in purchasing power compounded. This is the first promise in my lifetime they're likely to keep, other than their attempt to send me to Vietnam, neither of which I had much interest in. So I believe that over the next couple of years, the lessons that we've learned over the last 40 years, which is to say that life is benign, government is good, the Fed is your friend, there is a Fed put, that there's a fat guy in red that comes down your chimney this time of year. All these things, I think, are going to begin to fade in prominence against the arithmetic of getting paid 1.5% in a currency that's depreciating by 6.5% a year. The consequence of that doesn't need to be a replay of the 1970s, which saw gold go from $35 an ounce, $850 an ounce, and saw the interest rate go from, 4.5% to 15.5%? It doesn't need to be that dramatic. It is estimated, by the way, then that the market share of precious metals and precious metals-related securities in the United States was between 8 and 9% rather than 1/2%. All I'm suggesting is that the combination of the end of the benign bond era from 1982 to 2022 and quantitative easing and debt and deficit and negative real interest rates will cause the market share of precious metals and precious metals-related securities to revert to mean. And if that happens, demand triples and supply can't. Traditionally, gold bullion has been a form of insurance, Shay. You have preserved your purchasing power in circumstances where the purchasing power in other savings and investment classes gets degraded. So you would buy gold if you believed that the purchasing power of the Australian dollar was going to decline and the value of your savings products, your super, your bank deposits, your bonds was going to decrease. Silver has traditionally been something different. Silver has been more of an investment or a speculation than an insurance product. And if you observe the last two precious metals bull markets that I've lived through, 1970 to 1981, 2000 to 2011, what you will note, among other things, is that those bull markets are led by gold because the fear buyers first. But leadership changes in the middle of those bull markets when the momentum established by gold puts the value of the narrative firmly in the generalist mind, then silver starts to move. It moves both because its lower unit value allows poorer participants, as an example, the Indian peasantry, poor people in China, to participate where they couldn't afford to buy a meaningful amount of gold. They can't afford to buy a meaningful amount of silver. But it also happens because silver is traditionally more volatile. And people who are buying for one of the two primary investment motivations, the two are, of course, greed and fear. People who are buying from a greed point of view love the upside volatility in the silver market that occurs in the second half of precious metals bull markets. So the answer really depends on who you are. And I must admit, I'm of mixed minds. I believe that the set of circumstances that we see in front of us in the world today should cause anybody who is competent in arithmetic to be concerned about the purchasing power of their savings denominated in fiat currencies, be it the Australian dollar or the US dollar. So I'm attracted to gold. I'm attracted to gold stocks because ironically, nobody likes them. And I always feel comfortable when I'm alone. But I like them too, because in the way that I value them, which is the net present value of future cash flows at today's commodity prices, that is to say, net present value relative to enterprise value, the market capitalization plus debt minus cash. These companies at current commodity prices, their cash flows are the cheapest that they've been in my career. So I think that the commodity is going to go up, and I think the commodity prices, producers are cheap.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
I have bad news for you. If you're not rich by now, you're screwed. And if you're in debt, you're even double screwed. How so, you might wonder? Well, the sad truth is that you're working your whole life to make someone else rich. The mega corporations, the banks, the politicians, everyone is getting richer. They get your money. And what is even worse, they get your time, they get your life. You are not even in a rat race, you're in a financial prison. But what could a solution for you look like? Honestly, I don't know, but I know what a solution for me would look like. It's very simple. I use whatever money I have and I multiply it with 1,000. This could make my life much easier and probably yours as well. If you have $1,000 available and multiply this with 1,000, I believe that this could solve some financial issue for the one or the other. Of course, if you're ugly, you would have to multiply it with much more than 1,000. My name is Marco Stan, and this is what I decided to do. I decided to 1000x my money. This is not a joke. I know what you may be thinking. What is this guy talking about? How should this work? This is not possible. Well, I made a detailed video where I laid out my plan. And some clever folks might even want to look at this plan and copy it and do exactly what I do. This is just a little hint on the side. You have two options. You leave, you forget what you have seen. You do whatever you're doing and you hope that somehow you get some other results. Good luck with that. Or you click the link below the video. You enter your email address because I'm not showing this to everybody. You at least watch my video on how I plan to 1000x my money. The choice is yours. Make the right choice. Join me. See what a different future you could have. See at least how I intend, how I plan to do the 1000x. So click on the link below, enter your email address, and I see you on the other side. Your Marco Stan.